Hello traders, the title of the video is First Step to a Practical Elliott Wave Forecast Tips. Alright, I'm on the monthly chart of Automatic Data Processing Incorporation, EPIC ADP, Alpha Delta Papa. And we want to talk about first step to a practical Elliott Wave forecast tips. All right. So if you are an Elliott Wave trader, you want to understand how to use the Elliott Wave forecast. Few months ago, I have recorded a video about ADP, automatic data processing, and I have here my Elliott Wave count. You can see here this is my first Elliott Wave. Followed by the second Elliott wave in the form of 1, 2, 3, and the third Elliott wave from here all the way up here. That third Elliott wave has been subdivided into 5 mana wave. First mana wave, second mana wave, third mana wave, fourth mana wave, and the fifth mana wave. And then we have the fourth Elliott wave here, followed by the fifth Elliott wave. The fifth Elliott wave has also been subdivided into 5 mana wave. 1, 2, 3, 4, 5. So when we were here, alright, so right here, that's the end of the multi-wave. So the multi-wave has started from here, alright, and has ended here. Between the two vertical lines, we have first wave, second wave, third wave, fourth wave, and the fifth wave. And then we have a flat correction that was underway, 1, 2, 3, 1, 2, 3. So when we were here, you can see my drawing still on the chart. I forecast that the price has a high chance to go down 1, 2, 3, 4, 5. Now the question is, how do we use the Elliott Wave forecast, right? So as I explained to traders before, is that the Elliott Wave count or the Elliott Wave analysis or the Elliott Wave forecast is dynamic, is one step at a time. So at this point in time, it was normal to expect, all right, 1, 2, 3, 4, 5 wave down. But I have also recorded 2 videos recently. The first video was about how to avoid Elliott Wave clash with Fibonacci traders. How to avoid Elliott Wave clash, Elliott Wave analysis clash with Fibonacci traders. In that video, I explained to traders that when we are dealing with the flat correction, all right, so because we have the classic flat correction, the running flat correction and the expanded flat correction. So at this point in time when we were here, we were thinking of a classic flat correction. All right, here it is 1, 2, 3, 4, 5 down. But now you can see that the price extended went above that level and reaches the level of 138.2% Fibonacci extension level of the fifth wave. All right. So now we are thinking of an expanded flat correction instead of a classic flat correction. So now the price now here, talking about how to avoid Elliott Wave analysis clash with Fibonacci traders, we also know that there is another level above the 138.2% Fibonacci extension level. It is 161.8% Fibonacci extension level of the fifth wave. Why? Because Elliott Wave Fibonacci pattern traders may be looking at a crab pattern. The crab pattern is a Fibonacci pattern, and that crab pattern very often will end at 161.8% Fibonacci extension level of the fifth wave. I also told traders at Day Pro Traders YouTube channel when I was recording video about Fibonacci pattern that generally when we have a multi-wave followed by the first leg of the corrective phase, we have another group of traders that will join the Elliott Wave trader. Those traders are the Fibonacci traders that are trading the Fibonacci pattern. So usually you may see sometimes that the price may reach the 138.2% level, because those Fibonacci traders set their target at 161.8% Fibonacci, okay, extension level of the fifth wave. Sometimes the price may push it to 161.8% Fibonacci extension level. So now I will have to say, all right, if you found a resistance here at 161.8% level, you see, one step at a time, we must concentrate on the price without assuming anything, without imposing, okay, all right, the Elliott wave, okay, forecast onto the price. The price, the number one indicator. So here we will say priority to bearish signal below the $106.63, and priority to bearish signal below that level. High probability that if you find a resistance below that level, you go down 1, 2, 3, 4, 5, forming the expanded flat correction instead of the classic flat correction. But again, there are more to this. The reason why I'm recording this video today is because there are more to this. So now we are aware of the Fibonacci trend, and we know how to avoid the Fibonacci clash when we are performing Elliott wave forecast or Elliott wave analysis. All right. Now there is one more thing that can also, okay, help traders to use their Elliott wave forecast more efficiently. I want to talk about, okay, a higher degree and lower degree. All right. So the wave count that I was performing on the monthly chart here for ADP, stock automatic data processing. All right. You understand that I have 1, 2, 3, 4, 5 wave and here, and then we say correction has begun here. But if you look at the cycle, so this is a multi-wave, okay, in this session here, okay, but there is a bigger cycle. That's what we talk about. The higher degree wave count, we command the lower degree wave count. Sometime we may see the multi-wave and the correction. As you can see here, we counted 5 waves here, and we are expecting a flat correction. If that flat correction is completed, that is an Elliott wave cycle. But that Elliott wave cycle may constitute a mini cycle of a bigger Elliott wave cycle. So whenever you receive or you are performing an Elliott wave forecast, understand that the higher degree may also influence the Elliott wave forecast. So what am I talking about here? So now that we have done it 1, 2, 3, 4, 5 here, and we are expecting a flat correction here, which is correct, all right, there is a bigger cycle. So we can say that this move here, you see this move here, wow, all the way up here, we can call it for the bigger cycle, all right, the first wave. All right, and we may call this one, this move all the way down here, blah, blah, blah. All right, it's a correction of this, okay, trending first. So that will be the second Elliott wave of the bigger cycle. All right. And the move that we are looking at now, the multi-wave that I was talking about from here all the way up here, will constitute, okay, the third wave of the bigger cycle. Now that we switch from the lower degree to the higher degree, what do I mean by the lower degree? The lower degree is this section that we were looking at, multi-wave and a flat correction expected. But now that we are comparing the lower degree to the higher degree, we can now say first wave of the higher degree, second wave of the higher degree, and the third is the wave of the higher degree. So the flat correction that we are expecting here, we will call it what? The fourth wave of the higher degree. So though a lot of we are expecting a bit of pullback here, which is normal for this correction, we will say that if the flat correction is completed, we will expect the fifth wave of the bigger cycle of a higher degree. Though you may say that, oh, the Elliott wave count does not make any sense. It may not make sense on the lower degree. It will make more sense if we look at the lower degree in comparison with the higher degree. All right, are you getting it now? So the one thing that can also help traders that you may understand, whenever you see the fifth Elliott wave, understand that the fifth Elliott wave can be extended. So referring again to the higher degree wave count, first wave, second wave, and the third wave, expecting a fourth wave here. All right, we can, if the higher degree takes over, all right, if the stock continue to go out, it means that you're going to, okay, resume the higher degree, okay, cycle, all right, then we will apply, so you have to apply Fibonacci extension to the first wave of the higher degree, and we know that the first wave, okay, hold on please, let me remove this one here. Right, we can apply Fibonacci extension to the first wave of the higher degree. All right, and we want to see where are the Fibonacci key level. Hold on, please. So by applying Fibonacci extension, okay, to the first wave of the higher degree, we have. Let me see my line. Okay, that's correct. Okay, we apply Fibonacci extension to the first wave of the higher degree. We can see that when I apply the Fibonacci extension to the first wave of the higher degree, we have here the 314. This is it, the 314% Fibonacci extension of the first wave of the higher degree. That's the line there in the zone of $146. Why do we need to do that? Because we know that the third Elliott wave, all right, can go up all the way to the 314% Fibonacci extension of the first wave. Now don't get confused. Don't get confused. We apply Fibonacci extension to the first wave of the higher degree. We want to know where is the 314% Fibonacci extension of that first Elliott wave. It happens to be far away up here. So though we are counting first wave, second wave, one step at a time, we are now calling this the third Elliott wave, and we are expecting a fourth wave followed by the fifth wave. But this wave count can become a little bit more, okay, extended if we have, for instance, the price going up all the way to the 314% level here. At that point in time, we will be saying that that's the end of, okay, the fifth wave of the higher degree, but also understand that the third wave of the higher degree can continue to go up all the way there. So we need to be aware of all this. So that's why I say one step at a time. Remember, the third Elliott wave of this higher degree can go up all the way to $146.65. Can go up there. So if that is the case, we will say that our third Elliott wave has been extended big time. All right? Because now, if you look carefully, let me adjust my line. I have too many lines. I don't want to remove. I have two Fibonacci retracement line. This one here. Okay, let me remove this one at least. You know, now you can see here the 161.8%. Here it is here above the red line. The 161.8% Fibonacci extension level of the first wave of the higher degree. That's where our third wave of that higher degree is stopping now. One step at a time. So that's what we can say at this point in time. But remember that third Elliott wave that we are talking about now, if the price continue to go up here and reaches this level here, okay, and then did something like this, and then pull back like this, and then finally breaks above that $146 level, if that happens, we will say that in fact our third Elliott wave of the higher degree did not stop here, but has been extended all the way to the $146 zone, which is the 314% Fibonacci extension level of the first wave. Now, and the reason why I'm going a little bit slowly now, or I'm trying to repeat myself, some traders may already get it, so allow me to go over it for traders that may not understand what I'm talking about here. Now, I'm switching my attention from the lower degree to the higher degree. I'm talking about the higher degree now. So for the higher degree, we say first wave and the second wave. All right? So the third wave of any Elliott wave cycle, the normal third Elliott wave, can stop at 161.8% Fibonacci extension level of the first wave. That is the case here. So this third Elliott wave of a higher degree is a normal third Elliott wave at this point in time, but it can be prolonged up to 314% Fibonacci extension level of the first wave. But where we are now, okay, looking at the current wave count, one step at a time, first wave, second wave, no more third area wave. If it's not extended, if that third area wave today is not extended, we'll have a correction in the shape of flat correction, or the price may continue to go up, all right, all the way, and then we may have, okay, flat correction followed by a pullback, and then we have, okay, the fifth area wave bringing the price, okay, either to the 314% or 261.8% Fibonacci extension level of the first wave. In that case, my friend, our higher degree wave count will be first wave, second wave, no more third wave. Okay, a correction here. Now, again, even here, now as it is, it looks like a flat correction. We see 1, 2, 3, 1, 2, 3 here, but the price continues to go up. We may have to review our wave count, or probably we may have something like this, call this one the fourth wave, this 1, 2, 3. And this may happen to be the extension of the fifth wave that may propel the price all the way to either to the 261.8% or the 314% Fibonacci extension level of the first wave. Now, are you getting it now? What I'm talking about, how the wave count is dynamic one step at a time. If the third wave of the higher degree is a no more, okay, third wave, that's the end of it. So now there is a possibility that we may have, okay, either this is just the fourth wave of the higher degree, or we may have a flat correction that will constitute the fourth wave of the higher degree, and then we have the fifth wave. But if this is just the fourth wave of the higher degree, then our fifth area wave, we will say, is starting from here, and we push the price up. It may stop before, okay, the 261.8%. It may stop before the 314%, but we will call this section here the fifth wave of the higher degree. But there is another thing we need to consider here, talking about the first step to practical area wave forecast tips. Now, the second scenario is this. This is the first wave, this is the second wave. But our third area wave is prolonged, it's no more third area wave. Then we have to review this. Probably will say, all right, this George, blah, 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 this is the first part of wave, blah, blah. It may be prolonged all the way, okay, up to, okay, 261.8%. So our third area wave, if it is prolonged, that will change a little bit. We prolonged to 61.8% or 314% Fibonacci extension level of the first wave, and then we will have our fourth area wave somewhere here, and the fifth area wave may break above that 146%, $146 level. So in order to use the area wave forecast, okay, efficiently, all right, one need to consider, all right, that the wave count is dynamic. The third area wave we see now, we say, oh, this one is the third area wave. This is what's happened. So you are here, you think that, okay, this is the end of the third area wave, but then the price continues to go up, printing more data up, and then you realize that, in fact, all this is just the third area wave that has been extended. We must now align our wave count, our area wave forecast, with the reality of the market, with the price action, so we do not assume anything or misuse our preliminary area wave forecast. Any area wave forecast is just an expectation, is a preliminary area wave forecast if one is referring to, okay, the lower degree and the higher degree. Even now, though I'm talking about a higher degree, this higher degree on the monthly chart may also constitute, all right, again, a mini, okay, a cycle in comparison to a very big, okay, a cycle, area wave cycle. Because why? The area wave pattern are fractal pattern. To summarize this video is that anytime we see 1, 2, 3, 4, 5, okay, so you see 1, 2, 3, 4, 5 wave on any time frame, all right, that 1, 2, 3, 4, 5 wave plus the correction can be a mini cycle of a higher degree. That's the very important thing an Elliott wave practitioner should understand. So anytime you think that, okay, all right, so the corrective phase, all right, so we see 1, 2, 3, 4, 5 corrective phase, all right, that's one wave, one impulse wave plus a correction of a higher degree. Are you getting it now? So here it is. So at this point, I traded that way. Here they will say trending phase, correction. So now we are calling this first wave, second wave, or a higher degree. Okay? Now, even now we are saying first wave, second wave, third wave, fourth wave, and fifth wave going up to that point, and probably a correction. From here all the way to the end of the correction, that will be again, all right, a first wave and a second wave of a higher degree. So, in fact, the Elliott wave cycle, as we put it to trade, multi-wave plus a corrective phase, is a first wave and second wave of a higher degree. So sometimes traders get confused. They say, what's going on? What's going on? Due to the Elliott wave extension, especially during the third wave and the fifth wave, traders need to handle their Elliott wave forecast by comparing, okay, the wave count on a particular time frame to a wave count on a higher degree, on a higher time frame, okay, so they may use their Elliott wave forecast, okay, more efficiently. I believe that this video may be complex to a lot of Elliott wave new traders. I'm bringing here, okay, topic like a higher degree and lower degree. I'm talking about the fractal pattern of the Elliott wave patterns, very, very important. 1, 2, 3, 4, 5 waves plus a correction. That is a first wave and a second wave of a higher degree. Now, anytime you see 1, 2, 3, 4, 5, that's is first wave, second wave. Understand also we have another thing that is making it more complex is that the extension of the waves. So now we are saying it looks to me that this is the end of the third Elliott wave at that point in time. Today, that's how it looks. But if the price continue to go up, we may reconsider, call this, all right, this is not the end of the third Elliott wave. This is not a normal third Elliott wave. Now it becomes clear, probably if price continue to go up, we'll say, all right, now this is, okay, the extended third wave of a higher degree. So I will be coming back to ADP one more time in the future, probably next year, and we'll come back and see what has happened, and then we'll look at it again and explain to traders again how, okay, they can take the first step of a practical Elliott wave forecast. All right. So this is a practical Elliott wave forecast. So if you are involved in market forecasting or market prediction using the Elliott wave, okay, pattern, you need to explain to your clients that the wave pattern, a fractal pattern, and the wave count or the Elliott wave cycle on one time frame can be a mini cycle of a higher degree. That when one is considering, okay, the Elliott wave forecast, one must take into consideration the Elliott wave extension, especially during the third and the fifth Elliott wave. Sometime I watch video on YouTube when traders put comment on videos that my fellow Elliott wave trader have recorded and say that the Elliott wave count is wrong. The reason why traders may say that the wave count is not accurate is because traders do not take into consideration sometimes, all right, the higher degree and the lower degree or the Elliott wave extensions. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about first step to a practical Elliott wave forecast tips. Do you think this is a practical Elliott wave forecast tips? Do you find this video useful? If you say yes, all right, please give us the thumbs up so we know that, okay, you found it useful. If you think that, George, this is another blah, 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 please let us know by giving us the turn down. So this will put us under pressure to improve our recording. But if you think that this is an essential tutorial that can help other Elliott Wave practitioners, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. Speak to you soon.